So the tariff war continues and Trump still thinks he's winning. Now we are in bizarro world. The US really believes they can challenge everyone, the global economy, and still come out on top. But we are beginning to see cracks in his facade. It's apparent that Trump is gunning for a big reset through crushing the US economy, and the trade war is a big part of this agenda. Now the unspoken plan is to lower borrowing costs in America to prevent the national debt from imploding. Now, yesterday, Trump got desperate. He told Powell that now is the best time to cut interest rates. The US economy is headed towards a recession, and the Federal Reserve needs to release pressure on US companies and consumers. Now, we know tariffs are inflationary for US consumers, but it is deflationary for the economy as a whole. And let me frame this in another way. Tariffs raise prices for American consumers and lowers their standard of living. And if this continues long enough, US consumption will collapse and the economy will nosedive. The big boogeyman here is higher inflation. And the Federal Reserve, they agree. Powell has confirmed that the Fed is not in a hurry to cut rates even as the markets continue to collapse. The Federal Reserve, they are afraid of making the same transitory inflation mistake again. They know tariffs will cause US consumers to expect higher inflation down the road. And if Powell listens to Trump, he would ignite a bigger inflation crisis, and that will crush consumer spending even more while people are still making sense of the punishments. Even though the markets collapsed further, Powell didn't U-turn, which means his priority is clearly to contain the inflation fallout from Trump's trade war. Now, if we look closely behind the scenes, the entire Trump administration, they are in damage control mode. They are facing a big repudiation from the world, especially with China matching tariffs on US exports. The economy is about to hit a brick wall, and Scott Bessent is now on a media tour to justify Trump's trade war with the world.
How is China as a nation going to, this is such a big challenge. It's directly in their face. It's about every country on the globe, but it's really more than any other country about China, I think it's fair to say. How are they going to respond? What's their retaliation look like?
Well, I don't know if they can retaliate for a couple of reasons. If you look at the history, and I used to teach economic history, and when you look at the history, we are the debtor nation.
Yes.
We have the trade deficits. The surplus nation is in the weaker position because the Chinese business model and the economy are the most unbalanced, imbalanced in the history of the modern world. We've never seen anything like this in terms of their export level relative to their GDP, relative to their population. They're in a deflationary recession/depression right now. They're trying to export their way out of it, and we can't let them do that.
Now, in the same interview, Bessent was asked a question that really threw him off, and I think he made a grave mistake here. When Tucker asked him if Trump can reassure potential bond buyers and US markets, Bessent panicked and said something really bizarre. Even as the currency is crashing, Bessent said that the US has a strong dollar policy, and in the long run, the US dollar will remain strong, that Trump has the necessary ingredients to ensure the dollar strength won't collapse, but even rise. This is a big oxymoron. Firstly, a strong dollar goes against the end goal of the trade war in the first place, and that's to bring back US manufacturing and make US exports more attractive. And there's only so much the dollar can rise before US exports gets priced out. And this is at a time when industrial reshoring isn't even back yet. Bessent says that by putting strong economic policies, the currency will strengthen. But if you cut trade with the world and retaliation ramps up, which it is, the demand for US goods will crash, the need for dollars will reduce for trade, and when company profits drop, the desire to buy dollar-denominated assets like US stocks will also fall, another headwind for the currency's strength. But listen to this part, Bessent still isn't revealing the other side of the coin regarding the tariff war.
And this is the first step towards realigning that. A lot of our trading partners, including some of our allies, have not been good partners. If tariffs are so bad, why do they have them?
Great question.
Why do they have them, right? Or if the American consumer is going to pay all the tariff, then why do they care about tariffs?
Right.
Because they're going to eat them.
Tariffs will crush an already beleaguered US consumer by raising prices to the moon. And if this continues, the desire to buy US goods will go down. the desire to hold US debt will also fall, especially when fewer dollars are starting to flow out, something that we covered extensively yesterday. And as a result of this, we'll see even more bilateral trade flourish around the world where non-dollar transactions start to rise like never before. Countries like Malaysia and China, they'll use their own currencies to trade with each other and bypass the dollar completely. There's also another obvious reason why a weaker dollar is probably coming. US consumers are already buckling and there's only so much they can buy. Despite what Powell is saying, US consumer sentiment is collapsing. Long-term inflation expectations have risen to well over 4% in March thanks to the tariff war. And the higher this number goes, the greater the odds of people spending less, which makes sense. You want to hunker down and save money. Meanwhile, the change in payrolls are starting to fall. Fewer jobs are being created in the US economy over the last 3 to 4 years. So spending power in the economy is on the decline. The only way to reverse this is a weaker dollar policy to get people to spend, to drop interest rates eventually to stop people from recycling money into US assets like bonds. A weaker dollar drives domestic spending. Now, when Bessent says that the US has a strong policy, that's just smoke and mirrors. He wants to prevent a financial meltdown if the stock market crashes any further. And let's talk about the consequences here. When Trump imposed his new tariff regime, he shocked the world. Not just global companies exporting to the US, he basically frightened the political class around the world as well. And Canada is a perfect example of a country starting to wake up. The end result is very nasty for the US. They're about to lose a vital supply of discounted oil, cheap energy they have been enjoying for decades from up north, as well as their own exports getting punished. Now, when the auto tariffs went online, 6,000 Canadian jobs were given temporary layoff notices. The majority of job losses came from a Stellantis plant in Ontario that makes vehicles for Dodge and Chrysler, and those were supposed to be exported into the US. The plant will pause production for 2 weeks beginning Monday. Remember, Trump said that the auto tariffs are here to stay, so this 2 week shutdown could drag on to 2 months or even 2 years, no one really knows. And let's keep it real. When you get laid off, do you really care if US tariffs make sense or not? All you know is that your income has collapsed. Canada was forced to respond. They have responded back to Trump with their own set of auto tariffs. Now, the US, especially Elon Musk, should have seen this coming. The moment they pulled subsidies for Tesla away, the writing was on the wall. And as we mentioned before, no country can live in a state of constant, forever economic blackmail. Even the meekest politician will be forced to hit back sooner or later. Canada is actually the biggest buyer of US vehicles. Compared to Mexico or Germany, Canadian consumers bought 4 times more than either country. These, of course, included Teslas. But with a 25% retaliation tariff on US vehicles, this puts extreme pain on automakers. Ford, GM, and Mars, they're going to feel the pain. And like the US, the Canadian market is a tariff economy that keeps Chinese vehicles out. It should be a slam dunk, it should be a no-brainer for US companies to sell to. But thanks to Trump's trade war, that window has been narrowed. I really hope the trade-offs are worth it for Trump because foreign revenues for US firms, they're going to face the prospect of total collapse. Canada realizes that Trump isn't going to U-turn, at least on the auto tariffs. He has mentioned time and time again how they are here to stay. His focus is on the tax deal to reshore industries and to get US companies to invest more in the United States. And if that's the case, Canada can't rely on the US economy anymore. And that's why we are seeing headlines like this. Canada's energy minister is calling for their LNG project to double capacity to get ready for the export boom. And more importantly, to upgrade their western pipeline to carry an additional 300,000 barrels of oil a day. But things could accelerate much faster than we think. Now, there's no point upgrading your facilities and pumping out more energy if the end buyer is still the United States. And Canadians know this, how vulnerable their economy is to Trump's tariffs. And across the country, the majority of people support a new government-funded pipeline to diversify trade. In Ontario alone, 80% of people want a west to east pipeline to divert oil flows. Instead of just selling to the US, shift supply to the east to supply Europe that has an energy crisis, to also shift supply westwards to export more to China, Japan, and Asia at large. And this will be the future of global trade going forward. Many countries might cave in the immediate term, especially the smaller ones, but we best believe they will look for alternatives. Diversifying trade is no longer an option, it's a necessity to survive. And does that really look good for the dollar? I don't think so. Bessent might want a stronger USD, but he might get the exact opposite instead. Which brings us to the US stock market. And for months, we had the White House telling us that a recession is unlikely, and even Lutnick told everyone to buy Tesla stock. But we all know what happened. The US market had a bloodbath, one of the fastest, eye-popping single-day drops in history. You had to see it to believe it. And now Bessent and Trump are U-turning on their narrative and saying it's not our problem, it's not MAGA, it's how the plan was supposed to go. And according to Bessent, the stock market collapse was a Magnificent Seven problem and not the issue of the Trump administration. That the crash has more to do with China's DeepSeek AI model than Trump's economic policies, such as the tariffs. And once again, it's another blame the Chinese moment. So Beijing is to be blamed and not the reciprocal tariffs? This is very disingenuous when people's wealth just got obliterated yesterday. A lot of retirement money and savings they got torched on Friday, they went up in flames. And if the world does retaliate further, there could be bigger declines coming. We could see the S&P crash well below 5,000 points, which won't be very difficult, it's not far from there. But somehow to Trump, the crash was part of the plan.
First, we'd love to get your reaction, sir, to what's going on in the financial markets today.
Well, I mean, it's to be expected. This is a patient that was very sick. We really inherited a terrible economy, as you know, with a lot of problems.
So this was to be expected. Look, we know Trump couldn't come out and say stocks will crash a month before because it would most certainly crash the market. But to suddenly flip the script like a pancake and act like it was part of the plan is just crazy. Was this really part of the script to wipe out investors all over the world for his big reset? Now, the fall in the S&P and Nasdaq in just 1 week was the craziest in recent history. Nasdaq was down by nearly 10%, while the S&P fell by 8% in just a few days, the worst since 2020. And there's a reason for the magnitude of the sell-off. Investors realized that Trump miscalculated. The reciprocal tariffs are built on a crazy equation model of using the trade deficits as a hammer to punish the world. That's just insane. And because it's so unfair, it will invite retaliation, especially on US goods sold abroad. So is there more downside to come? Bessent himself just revealed the answer.
President Trump and I have talked about that a lot. So this is a national security issue that we're seeing here, but it's also an economic security issue. And it's to, I don't want to say redistribute, but it is to give working Americans real wage gains and enhance their lives. And I've said out on the campaign trail, my most frequent mottos was Wall Street's done great. It can continue doing well, but it's Main Street's turn. It's Main Street's turn. And that's what we saw yesterday. It's Main Street's turn.
He doesn't care about the stock market today, which means the odds of a Trump put or money printing is slim to none. So we have to hang on tight. US consumers are on their last legs, and next week itself, we could see more trade retaliations from the world. This is far from over. But let me know what you think. Will the markets continue to plunge? And is Bessent right or wrong about a stronger dollar? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.